If you're a pensioner, 2026 could be the year your tax code changes without warning, and that can mean paying too much tax or not enough. Most people never check their code, but it affects every penny you receive. Let's break it down simply. Your tax code tells HMRC how much tax to take from your income. In 2026, more pensioners will see changes because the personal allowance is frozen while incomes rise. This makes the system update more often. Here's what you must check. First, make sure your tax code matches your situation. If you have a state pension plus a private pension, the tax code should reflect that. If it doesn't, you may be overcharged. Second, check if HMRC is using the correct pension provider as your main income. If they choose the wrong one, your tax deductions could be too high. Third, if you receive extra income, like savings interest or part-time work, HMRC may adjust your code automatically. Many people don't spot the change until they receive less money. The fix is simple. Look at your tax code, compare it with your income, and call HMRC if anything seems off. A 2-minute check can save you from unwanted tax bills. If this video helped you, please like and subscribe to the channel.